This is FuboTV, and we can go to the daily chart. And we saw this, say, 230 resistance support band get breached and close below. Now, there was a reason why I had this dotted green line here and this uh, dotted red line here. I did a video roughly 3 weeks ago talking about this setup. Now, in news today, Disney is encouraging sports fans and other customers to switch to a live TV option from Hulu as part of its ongoing fight with Charter Communications. Disney pulled its channels, including ESPN and ABC, off Charter Spectrum cable service last week as the companies battle over contract fees. The blackout came in the middle of the U.S. Open tennis coverage and other live sporting events, including the start of the college football season. Charter's dispute with Disney stems in part from the fees Disney is seeking for its programming at a time when cable TV viewership is on the decline and streaming is on the rise. You got to remember, Disney owns a majority stake in Hulu. So before I get into the setup, let's look at this article. It is coming from the Motley Fool, why FuboTV stock was up big today. And this was late last week. So FuboTV, a teaming streaming platform, got off a lift today, along with competitors like Netflix, perhaps in reaction to some turmoil involving a cable provider and the owner of some networks. Specifically, the dispute between Disney and its networks, ESPN and ABC, and cable provider Charter Communications. Charter Spectrum Cable blocked the two Disney networks from its platform Thursday night after the two companies did not meet the deadline to secure a distribution agreement. The two sides are apparently in a dispute over fees. Spectrum is the nation's second largest cable provider. This also hurt other TV and cable stocks like Warner Brothers, Discovery, Paramount Global, and Comcast. But it did help streamers like FuboTV. Now, Fubo has had a nice run this year, and it's still pretty cheap with a price to sales ratio of 0.45 and a share price of around $260. Again, this was as of late last week. It saw a big spike in revenue in the recent quarter, up 41% year over year, while the number of subscribers jumped 23% compared to the second quarter of 2022 to 1.2 million. It also raised its full-year guidance for North America, now projecting 1.565 million to 1.585 million subscribers, a 9% year-over-year increase. Revenue guidance was also heightened to 1.26 billion to 1.28 billion, a projected 29% year-over-year jump. Company, however, is operating at a net loss of 54 million. This is down from 95 million in Q2 of 2022. All right, so let's get back to this setup here. I do want to zoom out to the bigger picture. You can see that price hit a bottom at the dollar level, and this is a fabulous setup. When you see 3 wicks, that typically implies that a reversal is taking place, and that's rightfully so what happened. Again, that dollar round psychological number served as a floor, and prices had a nice rise year to date, almost hitting my first target at $4. As you can see, you have some sellers, some buyers, so that is a first target. We nearly got there. We were off by 11 or so cents. But let me go through the setup. Before we do that, let's go to the weekly chart. And you can see the bullish crossover between the 13 and the 26 simple weekly moving average. All right, so here's the setup. And I'm just going to call this a, let's put a label. Bear trap. All right, before we do that, we have to go back out to the weekly chart because I do want to show you, you had what I'm going to call a rally in price, a basing candle, and then a rally out. Although price did not take out the pivot high at 324, this move up was on above average volume, right? You can see on the weekly chart price did react once before moving closer to that $4 target. All right, now here's the setup. Again, that's that level that hit before price came back down. Now, being at this level, price just dipped its toes in the zone. Still served as a valid support level. However, that didn't work out. Now, this green dotted line, again, that was the entry. Stop was at $2. And you can see that now typically when you do a stop, you want to include the some percentage of the stock's ATR, to anticipate situations like this, right? This is also at the round hole psychological number $2. So it did dip 6 cents below. Nevertheless, why is this a bull trap? Well, support and resistor traders, when they saw price breach and close below, that fell into the hands of the buyers, right? A couple of things going on. You have this bullish crossover between the 50 and the 200-day moving average. You have the 200-day moving average serving as dynamic support. You have the 100-day moving average serving as dynamic support. So this was definitely a bear trap, and the setup did work, as anyone that would have taken that trade would be up 2-1 thus far. And I kind of projected it, right? You breached this zone. It was coming into a level where they were buyers based on this strong move higher, as we saw in the weekly chart. Again, if Charter Communications and Disney continue to squabble, it's only going to benefit FuboTV, and so price may pause, but look for price to at least retest the recent highs at the 380 level. Look for a target at 375 first before the first target at $4. Thanks for watching. Subscribe. Please like the video.